Video 2. This was not going to be so long. State of the market, November 19th, Saturday, 2022. Say the market hasn't gotten any better. The Fed has been speaking, like Fed governors have been speaking this past week, and they've all been saying the same things, and that's not going to change. There's going to be no pivot. There's going to be no stop. There's going to be no pause. We might get a pause once we got close to 5%. Now we're at 3.83. We might have December 14th, we might have a zero point 0.5 hike. That'll get us to 4.33. And then we might have another quarter and another quarter on top of that. So we might see another 1% on top of our 3.83. That, I don't know. But we're definitely not stopping December. December won't be our last hike, whether it be 0.5 or 0.75. So last week with the CPI and the PPI, that was absolutely ridiculous. That changed nothing. All that did is give the Fed ammo to understand that what they're doing is working. And of course what they're doing is working. Because we had a 0.125 in the beginning of the year, and then now we're at 3.83. And we're going to have 4.33 by the end of the year. There's no doubt we're going to have at least 4.33. We might have a 4.5 or higher, but we're going to have at least a 4.33. So, of course, inflation is going to cool down. Anyone that thinks that inflation is not going to cool down, not too bright. Come on. We had a 0.125. We had bad earnings. Unfortunately, earnings are bad. They're not horrible, but they're bad. Big companies, Microsoft, Amazon, Google, Meta, Qualcomm missed, Nvidia just missed. I mean, a lot of big giants are missing. Earnings is bad. Earnings wasn't horrible. Earnings is bad. Earnings is bad. Interest rates are going up. Inflation is still sky high. Why are we rallying? These people last week are causing a lot of FOMO. I want to send this video to Tom Lee, all right? Because Tom Lee last Friday went on CNBC and kept saying December is going to be the last hike. You know what? After I made the video last week, I sent it to Tom Lee. He's blocking me. He should be blocking me, but you know what? What's the grown-up thing to do? Because he's a money manager, probably managing millions and making millions. So what the grown-up thing to do is debate me. Tell me why I'm wrong. I sent you the video with everything. Reason. Tell me why I'm wrong. Because when I am wrong, I want to know why I'm wrong. I want people to debate with me. I'm okay with the debate. A healthy debate is good. We both learn a little something. When you just block me, what did you learn? Yeah, I'm going to school you. I am going to school you. I want to send this video. I want people to know that you're blocking me. And it's obvious. Now, you have the credentials because you've been on CNBC. You've had the opportunity. I don't have the opportunity. But now that you're blocking me, it's like a smack in my face when I'm far better than you. And unfortunately, I'm far better than a ton of people that are on Wall Street, that are on CNBC. But I'm going after you because you are on CNBC overtime, telling people and causing FOMO, saying that the market's going to rip higher. We're going to have a Santa Claus rally, and the December hike was going to be the last hike. You are going to be wrong, and I want to bet you 100 G's, $100,000. I will go to you in person. We can get it notarized that December will not be the last hike. Now, like I said, I don't know if we're going to get a full point hike when they're done and they pause, but December won't be the last hike. December definitely won't be the last hike. And like I've been writing in the post, the only way to combat all these rate hikes is if a company beats. There are companies that are going to beat. We have over 8,000 companies. So do not expect that all 8,000 companies are going to miss earnings. That's never going to happen. Never going to happen. But if we look at the first quarter of 2021, when we're set up to do the RIP rallies, like 50% of the companies were scoring 85 on my grading scale. 50%. That's half of the companies were beating by like 10% on top and bottom line. And then like 25% were scoring like a 90. which means some were being by 15% on top and bottom. Right now, most of the companies are either missing top or missing bottom or missing bottom, beating top. That's bad. That's scoring a 60. So if earnings are bad, interest rates are still going up, rate hikes are high, and the only reason oil is down so hard is because China is offline right now. They're having that zero COVID policy. I see, and I don't care that oil is under 80. I see oil in the wintertime going between $100 and $120. I was saying that months ago. While the war's still going on. Now, if the war ends, that's a whole different thing. We have to reanalyze all the data again if the war ends. Like natural gas right now, I think it's below $5. I see natural gas at between $7 and $8. It shouldn't be 10 like it was when the war started. Almost 10. It was like $9.50. But I don't see natural gas $5.50 like it is right now. Not with the war going on and not in the wintertime. Now, if the winter is a little warmer, that'll change the natural gas. But we're talking about oil. So oil is big right now. Oil is big. Like we all need oil. So when oil goes up, it hasn't yet. But when oil goes up, that could also affect CPI. Now, the way that the market rallied, the Nasdaq was up 760 on Thursday because CPI was 7.7. I'm telling you, if I went away for the day, came back, I would have thought CPI was 5 flat, not 5 handle, which means like a 5.8, a 5.9. I would have thought it was 5 flat. It was a 7.7, which is horrible. A 7.7 is still like one of the highest in 40 years. So that's a big smack in all the faces. So this week, when the Fed governors are speaking, more Fed governors are going to speak. And we're 3 weeks out from another CPI and the Fed on December 14th. So do you want to get punched in the face at that time? So nothing's changed. I see the S&P, a safe trading range on S&P is 3,200 to 3,500. 3,200 to 3,500. The Nasdaq safe trading range is 9,250 to 10,250. It was a little bit higher before until earnings came out. Earnings is bad. So I don't care that the Nasdaq is higher. I don't care that the S&P is higher. I don't care that analysts are saying it's going to be higher. I'm telling you what I see fair value is. Now, it doesn't mean that it's going to go down to those levels because the stock market is a live auction. But it means to me that it's not safe to trade. It's not safe to trade. If the S&P falls to like 3,500, 3,600, okay, it's a little bit safe. It's a little bit safe, but not really safe. The Nasdaq last Wednesday before the CPI was like 10,200, so it was in that range. I was doing amazing on puts. I was doing 5-6 puts a day. Like it was incredible. And then Thursday, and the CPI was not good. The PPI was not good. CPI PPI not good. I don't know what's going on out there. People are calling FOMO. There's massive pent-up demand to rally, but now is not the right time to rally. We need good data. We're going to do rip rallies, and we're going to make a ton of money when the data is behind it. Right now, the data is bad. The data is not getting better. It's not even close to getting better. You think 7.7 is a lot better than 8.2? It's a lot better than 9.1, which was our ultimate high months ago, but it's not getting a lot better. I would say the data is getting better. Inflation started to calm down. Earnings were strong. And we already had interest rates at close to 5%. Since interest rates are at 3.83, CPI is 7.7. Unemployment is at 3.7%. That gives the Fed room. That gives the Fed room to keep hiking rates. When they have room to keep hiking rates because people have jobs, we have GDP that was positive, even though it's due to exports. GDP was positive, right? There's still jobs at the moment. So that gives the Fed more ammo to front load. So there's no reason they're not going to pivot. Pivot means they're going to do the opposite and reduce rates. Come on, man. They're not even going to pause. They're not going to pause. They might pause at 0.75 or 1% and then wait. But they're not going to do a 0.5 and pause. Like I said, I would bet anyone. I'd bet anyone serious money that they're not going to raise in December and just pause. Now, this last thing I'm going to discuss before I go into video 3 is the stock market is not everything. I know we're trading, we like it, it's important, and people keep saying, why don't they just keep raising interest rates? Our inflation is not so bad. Why does Powell have to do this? They're not looking at the whole picture here, okay? You do not want to live in the cities if we have stagflation. Inflation is the number one thing. You must attack inflation, because when inflation goes sky high, that means the value of the dollar is going down. Inflation goes sky high. Companies start laying people off. That means they don't have jobs to make money. That means GDP starts going down. You get stagflation. Stagflation was the 30s. The 30s, okay? So if we have stagflation where your dollar is worthless, people don't have jobs, and GDP is down, that causes a massive recession. Stagflation leads to recession, and when you get that, you get crime. So these people that are coming on CNBC and saying that the Fed is doing too much, they must analyze the atmosphere of high inflation. They must analyze the environment. They're not looking at that. They're looking at the stock market and the effects of the stock market. All right? They're not looking at the major effects on crime. Target just announced that they had $400 million loss in just crime, in people stealing. That happens because inflation is high. When inflation is high, that means that you can no longer pay your rent. You can no longer get food. You can no longer do things. And then what does that mean? That people that weren't even criminals, they were not even criminals, are just trying to survive, just trying to live out there. And if they cannot eat what they are used to eating, they start to resort to crime. So I'm telling you, you do not want to be in an environment of stagflation. We were close to stagflation. Anytime, to me, if you get interest rates at like 10%, sorry, not interest rates, you get inflation. Sorry about that. Anytime you get inflation at close to 10%, you are closely going to enter stagflation. Why? Because not everyone has a job. Not everyone can get a good job. So the first people that resort to crime are the lower income or the homeless. They resort to crime because that means the dollar that they were getting before could no longer get the same. So anytime you get close to 10%, crime rate goes up. They need to study this. Hopefully the Fed does, and that's why the Fed is not going to pivot.